Okay, welcome to another Gold Nugget segment. Today's special guest, Peter Schiff from Euro Pacific Capital. Well, the housing market and the economy have been on the rebound for 7 months. Even Robert Shiller, co-creator of the Case-Shiller Index, says that real estate is performing better than he expected. Have the credit and housing crises truly passed, or is it merely the eye of the storm? Joining me today to cover these questions and macroeconomic trends, Peter Schiff, President and Chief Global Strategist of Euro Pacific. Welcome back, Peter.
Hi, thanks for having me on again.
Instead of asking what you think of the housing market, I'll begin by asking if you are still listed among the ranks of house renters.
No, I actually own my house now. Although it's not any kind of judgment on what I think the market is going to do. It just happened to be my own circumstances where I ended up buying the house. But certainly, the market has come off a lot. The house that I bought, I had been renting for a year prior to my buying it, and I just didn't feel like moving anymore. The owner really wanted to sell it. He didn't want a tenant in there, so I was going to have to move out and rent another place. And there were plenty of places on the market, but the price had come down. I think the price had come down about 60% since it was first listed 3 years ago, and the price I ended up paying was maybe 40% below what the original owner paid when he bought the house new in 2002. So, I certainly didn't, pay top dollar for the house, right? If I'm buying it at 40% discount to what the house was bought at in 2002. But I still think, relative to what I could have rented other properties for or what I was paying in rent for this property, I certainly overpaid. And, relative to what it would cost to build the house from scratch, I didn't overpay. I think it would actually cost me more to build it than it did to buy it. But my feeling is that before the real estate market bottoms out, there will be even better bargains. But for my own circumstances, it wasn't really about price or, I don't look at the house as any kind of investment. I know I'm going to lose money on it, just like I lose money on my boat, just like I lose money on my cars. It doesn't mean that I don't buy them.
Clearly, the federal tax credit, $8,000 for new home buyers, $6,500 for just about everyone else, was an important component in this housing rebound. It's scheduled, however, to expire on April 30th. Do you see legislation coming down the pike here to extend the tax credit to avoid a double-dip housing slide on this election year?
Well, I hope they don't extend the credits, and even if they do, it's not going to avoid the double dip or whatever you want to call it. Those credits certainly didn't do anything to help home buyers. They certainly helped home sellers because it enabled people who were selling homes to get $8,000 more for those homes than they otherwise would have received. But it doesn't benefit the buyer. The buyer simply transfers more money to the seller. Absent those credits, homes still would have sold. They simply would have sold for less money. Now, to the extent that some people were able to use those credits to make a down payment where they were, where they otherwise might not have had a down payment, then the credits might have helped people buy houses that they otherwise wouldn't have bought because they wouldn't have had the down payment money. But again, that simply makes the housing market weaker because you have people in homes with very little or no equity. But ultimately, these credits are not going to stop home prices from falling because in many parts of the country, home prices are still much too high relative to the ability of potential buyers to afford them. So prices need to come down considerably from here before they would be affordable. Proof of the pudding is the fact that nobody can get a mortgage now unless it's guaranteed by the government and through Freddie and Fannie or FHA, and that's because private lenders won't lend on these inflated home prices because they know that they're not going to get the money back if the loans go into default. The only reason they're willing to lend is because the government is there. But we can't have a housing market where the only reason transactions take place is because the government is guaranteeing or co-signing all the loans. I mean, that's ridiculous. I mean, why would you want to co-sign your neighbor's loan? I mean, I don't want to co-sign somebody else's loan. There are a lot of people who are renting apartments. Why do they want to co-sign somebody's mortgage?
Not to mention that Fannie and Freddie just announced approximately $500 million loss for the year.
They did. And in fact, one thing that Fannie and Freddie finally did, of course, an example of closing the barn door after the horses have left, they just noticed that I think 17% of their interest-only mortgages are now in default. So they decided to no longer insure or package interest-only mortgages. It's about time. They never should have done that in the first place. But you can obviously see that, there's so many more defaults. I think maybe of their entire portfolio, I think 4 or 5% of the loans are in default. But if you just carve out the interest-only mortgages, it's 17%.